Now, for today's business news, we can go to Jameel Ahmad, Chief Analyst at GTC, who's going to fill us in on what's happening in today's markets. Good morning, Jameel. Can you tell us first about the global market reaction to the latest US monthly jobs report?
Good morning, and thank you for having GTC. Look, we seem to be continuing the selling momentum in global markets that started throughout last week, and it seems to be continuing into this week. That's because we seem to be selling the news that the Federal Reserve, the US Central Bank, will finally be cutting US interest rates this week, after previously buying the rumor that global central banks would be lowering interest rate policy in this year. Now, we have seen a little bit of a reaction following the latest US monthly jobs report, where the United States added 142,000 jobs. It's a little bit lower than expectations for 160,000, but it wasn't so much of a data miss to suggest that the Fed, the US Central Bank, might cut interest rates by 0.5 basis points. That's 0.50% this week. That seems to be driving the global markets a little bit lower because previously investors have been buying into the hype that the Fed, the US Central Bank, will be more aggressive with interest rate cuts.
And these interest rates, globally, what influence do you expect them to have?
Well, they seem to be hoped to be the medicine that's going to help reinvigorate economic momentum. But the key word there is hope, because we are already seeing that some weakening momentum with economic data globally. Whether you're looking at China, whether you're looking at the United States, the European Union. Actually, in fact, there's not many bright spots now in developed markets, somewhat the United Kingdom and somewhat Japan. But generally, we need some time to see if lower interest rates do feed into economic data. So we do need some patience. I would say maybe these interest rate cuts that are taking place, whether in Europe, the United Kingdom, the United States, or so forth, we might not actually see the impact until late this year or early next year. But they are hoped to help increase borrowing momentum, and that should help economic data. But the key word there is hope. We have to wait and see.
And coming up on Tuesday night, we have from Philadelphia the second US presidential debate, but the first one between Kamala Harris and Donald Trump. And this is likely to have quite an effect on polls, but it potentially could have quite an effect on the markets too. What is likely to happen there?
You're right. Potentially is the key word there, because at the moment it's not seen as a major risk, this debate for financial markets, but it could be if the opinion polls swing in one direction or the other following the debate. Now, we've seen such a swing in the seesaw from being quite pro on Trump in terms of the probability of him winning, and recently it seems that Kamala Harris has kind of leveled up and that seesaw's a bit more even. Again, we know not that much about the Democratic candidate in terms of what the financial market implications might be. But we do know somewhat from the previous presidency of Donald Trump what America might look like in terms of American markets being pro-growth and so forth. So we need to wait and see now whether we do have a swing in the opinion polls, but I do expect it to be blockbuster in terms of the media attention and in terms of how investors are watching for potential clues on how the polls might look after this debate.
Thank you very much for that, Jameel Ahmad, Chief Analyst at GTC.